So
Great.
let me ask you this, Ben, right? Because you're talking about, hey, I had to analyze this deal for 3 months, right? So what's is we got the chicken or the egg syndrome, right? Do you go out and you raise the capital and then you go and find the asset, or are you locking in or trying to lock in the asset and then go and raise the capital?
I think when it's because it's not just like, hey, I need somebody just to give me $100,000. Like, dude, we're talking about big capital raises. I think you need to have some preliminary conversations with people that would potentially put money in.
Okay.
And people have probably been given this advice in the past, but it's legit, right? You put a fake kind of investor deck together, right? Hey, this is a deal. Maybe you didn't win it, but here's what I was going to do. Here's the returns that we were going to make. Here's the exit strategy. And you start going around and you're pitching people. Hey, if I find a deal that hits this box or roughly this box, would you invest? Field their questions, field their concerns, get them excited. So when you actually have a deal, they've already been primed, right?
Hmm.
Now if you're just like, hey, I haven't talked to this guy. I met him at a networking event 5 years ago, and now I'm going to just pitch him out of the blue on, hey, I'm raising $5 million. Yeah, it's probably gonna fall on deaf ears. So I would always say that you need to have a deal. The better the deal, the more likely you're gonna have somebody that's gonna say, you know what, I'll put some money into that. So if you don't have the deal at all, it's all bets are off. But you want to have those preliminary conversations up front, even prior to the deal, just so your people are ready
Okay.
and they
So
know
it's
they're not.
basically, is it like having that deal box pretty much? Hey,
Yeah, defined, right?
this is what we're
Yeah,
trying
like,
to make.
I'm
Okay.
trying to, I'll use you guys as part of I'm looking in Phoenix, 100 units and above. It's going to be in maybe this part of town, and then it's going to have some value add. And these are going to be the things we're going to come in. We're going to update the interiors. We're going to do this, giving them that box that they can, okay, that actually sounds like something that I'd be interested in investing in, right? Because a lot
Okay.
of people, they know about multifamily, but I remember when I first got into single family, that was because I used to do Rich Dad Poor Dad's training thing, and we were on a bus tour. And I remember to this day, this was 12 years ago, this guy, we were driving past an apartment. He's like, oh man, those are like ATM machines. They're just making money. And I'm just like thinking, I'm like, how could you ever buy something like that? Like, isn't that a bunch of
Right.
Wall Street hedge fund guys? So that's what a lot of people think, right? They understand single family because everybody, well, not everybody, but most people understand the fact of a home, and maybe a lot of people have a home, right? But multifamily commercial properties, that's like something different. So you have to get people educated on what it is. You have to get people educated on syndication too. And so if you can come to them with, hey, this is the defined box of what I'm looking for. This is the timeline that I'm looking to get it under contract by, and this is what your investment might look like, right? And getting them educated on, hey, I'm pooling money, I'm syndicating this. This is what that means. You're going to be a part of an LLC. You'll be a partner. I'm going to give you a K1. Educating them all on that, then they're ready to go. You've already broken down or solved a lot of their problems and gotten past a lot of their excuses. And now it's just a matter of just pitching them on the deal,
That's
And
good.
so I think that's where you have to start.